We're seeing the euro versus US dollar trade pretty much unchanged after a move to the downside and a rotation back to the upside. The same goes for the pound versus US dollar. For the dollar versus yen, it's all to the upside as stocks move higher and we have a risk on sentiment. So let's talk about the major currency pairs from a technical perspective. Let's get going. U.S. yields are lower by about 2 or 3 basis points. We're seeing the stock market zoom to the upside, helped by earnings from two of the big Magnificent Seven, I should say. Meta shares are currently up 6.15%, and Microsoft shares are up 9.24% in pre-market trading. That's pushing up all the technical stocks. The NASDAQ index is up sharply, and the U.S. dollar has seen rotations in the euro and this pound versus U.S. dollar, but the dollar versus yen surging to the upside. Let's take a look at the euro versus U.S. dollar. This is the hourly chart of this currency pair. And what we know is that yesterday we switched the focus from the 100-hour moving average being support here and trading above the 200-hour moving average, but failing, to using the 200-hour moving average as resistance yesterday, and we ended up moving to the downside and then moving away from the moving averages. So there was a break yesterday. We closed out down here and early trading in the Asian session. We continued to move to the downside, but we did find support buyers ahead of that 1.1271 to 754 area. At risk of being a broken record, those levels go back to the daily chart. In the daily chart, we take a look at the high price from 2022 to the low price from 2020 high to the 2022 low. The 61.8% retracement that comes in at 1.1271. That's the 7.1 part of it. This high right here going back to 2023, the 2023 high, which is the highest level going all the way back to, well, 2000, looks like 21 through here. That high price came in at 1.127754. So that area between 7.1 and 7.54, I've earmarked as a key level on the downside that if we move below, it would increase the bearish bias. And as you can see in trade here today, we moved down toward that level, but found early buyers against that level and pushed back higher. We are now a little bit above the closing level from yesterday. Well, probably right around the level. Looking at the current price right now, this area right through here between 113.07 and 113.28. I didn't mean to do that. I meant to do this. Is going to be a support barometer for the short term and trading here today. If the price can stay above that, maybe go back up, test that 100-hour moving average. If we move below it, then we're looking down toward that 112.71 to 75 level. So be aware, be prepared. Let's take a look at the dollar versus yen. This currency pair had a move to the upside in trading yesterday, but as you can see, we traded above and below the 100-hour moving average. But in the Asian session, what did we do? We found support buyers here against the 100-hour moving average. And then the market woke up and it said, well, maybe we can push this thing to the upside. We saw increased momentum off the break higher, and that momentum took the price above the highs for the week. We took the shares above the high from last Friday. And also above the 38.2% retracement of this move to the downside, which is always a good news for traders. It's a minimum retracement level that you have to get to and through to increase the bullish bias. And so we went above that level, extended above this old high, this area up here. And as you can see, we've tried to hold support against that 38.2% retracement. And so we're making progress here. If the price can stay above the 38.2% retracement, we have room to roam to the upside with hopes of next getting to the 50%. That's another key target on the top side from a retracement standpoint. If we can get above that, then it opens the door to further upside. So we will see about that. But if we do start to fail back below the 38.2% retracement, we could see a rotation back lower for this pair. So key level for traders today is this 38.2% retracement. Finally, let's take a look at the sterling versus US dollar. And again, we'll look at the hourly chart for this currency pair. And like the euro versus US dollar, we did use the 100-hour moving average nicely as resistance up through here. The ability to hold resistance against that level helped push the price lower into the close. And we did see the Asian session price move to the downside, getting below this swing high right here, which comes in around 132.92. But we could not sustain momentum to the downside, and we found support buyers, probably right around these levels right through here. where we had this other swing low that kind of actually corresponds roughly with that Friday low price that we saw nearly a week ago. And we started to rotate back to the upside. As you can see, we're back there up testing the 100/200 hour moving average. This lower one is a 200-hour moving average. And this is going to be the key area right here, folks. That if we hold resistance, and so far we have, as you can see, we're trading a little bit off of that level right here, then that keeps the sellers in play, and we could push the price back to the downside and continue the idea of correcting the sterling versus US dollar from this big move to the upside. We are well short of the 38.2% retracement, as you can see, so there is room to run to the downside, but the first things first, need to stay below the 100 and 200-hour moving average. If we can't do that, the sellers are not winning, the buyers are, so be aware of that level. That's how I look at the three major currency pairs from a technical perspective. My name is Greg Mikulski. Good fortune with your trading. Bye-bye now.